We have all been seeing the articles talking about the looming recession that is likely coming here in the US. And while it can be a bit unsettling and overwhelming, today I want to talk about 5 of the easiest ways that you can ease your worries and actually make thousands of dollars during the likely upcoming recession. All right, let's jump right into it. What is going on, everyone? I hope you are all having a fantastic day. So, I'm not personally one to buy into the doom and gloom mentality, and while it is possible that a recession could be on the horizon here in the US, all we can do is hope for the best and plan for the worst. And that all starts with the first thing that you will want to do that will allow you to earn thousands of dollars during the recession, and that is building an emergency fund. I get that building your emergency fund is not directly going to earn you anything. However, having that financial cushion is so important, not only to just put your mind at rest, but to enable you to make clear and effective decisions at a time when a lot of people will start to panic and be making very emotional decisions. Things happen fast during a recession, and when things happen quickly, especially on the financial side of things, most individuals, and businesses for that matter, tend to make very rash and fast-paced emotional decisions, and that's exactly what we want you to avoid. So no, this one isn't flashy and fancy, and it's not going to earn you thousands of dollars on its own, but it is a stepping stone that will allow you to have that financial cushion and make important decisions that will eventually net you a lot of money. 3 to 6 months of expenses is usually what is recommended, but once you've got that taken care of, the second thing that I would recommend is dollar cost averaging after the market falls, which has already been happening a lot. Now, statistically, you are actually better off just putting your money into the market as soon as you possibly can. However, like I said earlier, things move fast during a recession. And if you're trying to time the market thinking that you're going to get in right at the bottom, then let me be the first to tell you that the chances of you actually pulling that off are slim to none. So if you can't stomach the idea of putting your money in and then having it immediately lose 30% if the market continues to go down, then your best bet is to dollar cost average. By no means is this a groundbreaking strategy, but dollar cost averaging simply means that you are buying consistently on a regular basis, regardless of where the price is at of certain investments. And what this does is it helps even out some of that volatility, because you're going to buy at the highs, you're going to buy at the lows, you'll buy a little bit in the middle, and over a long period of time, the trajectory almost always points up, because the stonks only go up. Now, this obviously applies to things like mutual funds, index funds, and ETFs, and this is where I will personally be implementing this strategy, but it does also apply to individual stocks as well. However, you really want to be careful with that one, because individual stocks can much more easily be influenced by a ton of outside factors, and obviously come with a lot more risk as a result. Now, that actually brings us to the third thing that you can do to make thousands of dollars during a recession, and that is getting back to the basics and investing in consumer staples. What I mean by this is investing in companies who sell goods that are the last thing that would leave a family's budget. For example, a company that sells higher-end cars or flat-screen TVs is likely going to see reduced revenue during a recession, because when things get tight, those discretionary purchases are usually the first thing to go. Compare that to a company that sells food or clothing or hygiene products, and those are things that are going to be the very last that would leave a family's budget, because we all need to eat, we have to clothe ourselves, and we have to continue taking care of ourselves, and therefore continue buying products that will allow us to do all of those things, regardless of what is happening in the economy. Obviously, this can take the form of purchasing individual companies that sell those goods, or you can buy index funds and ETFs that focus on specific sectors or asset classes. The fourth thing that you can do to earn thousands of dollars during a recession that should be done in tandem with the previous 2 tips would be investing in dividend stocks. Now, if you've never heard of a dividend stock before, no worries. This basically just means that the company is going to thank you for being a shareholder by sharing a small piece of their profit with you. Some companies pay very high dividends, others pay no dividend at all, but what oftentimes happens during market downturns is we see dividends go up significantly as a way of incentivizing investors to invest in those companies. I've seen dividend yields in the past skyrocket to double digits, meaning if you owned $1,000 of a particular company and it paid, say, a 10% dividend, which is a fairly extreme example, then that would pay you $100 just for owning that stock. So not only are you able to hopefully buy low when the stock is down during a recession and profit off of the stock's rebound, but you can also earn substantial and fairly consistent income from dividends from certain companies that are paying those really high dividend yields. So if you've had your eye on making a specific investment, then I would definitely keep a close eye on those dividend yields and see which ones start to go through the roof as the market continues to pull back. And remember that dividends don't only apply to individual stocks. If you invest in an ETF or a mutual fund or an index fund, for example, then those funds are likely investing in stocks that pay a dividend, and the fund is going to share those dividends with you. Another tip I always recommend is to reinvest your dividends, meaning if you get a $100 dividend payout, then instead of just sticking that in your pocket and calling it a day, you can actually automatically have those dividends reinvested back into your portfolio to purchase more of that particular asset, which will then eventually pay you more dividends, which will then buy more of the asset, and before you know it, you'll be on the other side of this recession and be way better off having gone through it. And in general, with these investing tips, I always like to mention the very well-known Warren Buffett quote, which is be fearful when others are greedy and greedy when others are fearful. Meaning when everyone is losing their mind and panic selling and thinking the world is coming to an end, since you have an emergency fund and you are grounded in investing principles that you believe in, you can slow down, take a deep breath, and make wise investing decisions without a lot of emotion that could net you a lot of money in the long term. All right, and the fifth and final tip is one that is a bit off the beaten path, but is something that needs to be considered, and that would actually be investing in you. Now, I get that that sounds stupid, and a recessionary period seems like the worst time to be investing in yourself, right? Actually, I would argue the complete opposite. A recession can be a great time to reevaluate your financial priorities and many aspects of your life in general, even outside of finances, but this could be a chance for you to go back to school or seek out a new career opportunity, or better yet, even pay down the debt that has been hanging over your head for far too long. Obviously, this is assuming that you have a stable financial foundation, including an emergency fund and income, because if that's not the case, well then obviously making an extra mortgage payment or going back to school is probably not a good idea in that particular scenario. But the real reason I mention this is because if you're able to prove to yourself that you have a stable financial base and you're able to weather that storm even during a scary recession, then making career moves and doing all of those things that you've been thinking about doing, like going back to school and all the things that you've been pushing off, might suddenly feel like they are within your grasp and feasible from a financial perspective. And when it comes to paying down your debt, remember that you're basically getting an instant return on your money, because if you're paying down debt that has, say, a 6% interest rate, well, then you're essentially getting an immediate 6% return by paying that off. Not to mention the fact that interest rates typically move very quickly during a recession, so it can be a great time to reevaluate the debts that you currently have and how you are going to pay them off as fast as possible. So there you have it. Those are my 5 tips that will hopefully help you ease your worries and weather the storm that is coming and earn a lot of money on the other side. Again, I don't buy into the whole doom and gloom mentality, and if you have grounded financial principles, then you should be acting in a similar way right now as you would any other time, including during a recession. Just remember to take a deep breath and remember that you've got this, it's going to be just fine, and don't listen to all of the doom and gloom and panic that we oftentimes see in different articles and on the news. Be sure to check out some of my favorite financial tools using the links down below the like button, many of which will give you some free cash when you sign up, which is always a great thing to have during a recession as well. As always, thank you so much for your time. I really do appreciate it so much. Take it easy, and I'll see you in the next one.